update here at investingcube.com. My name is Alejandro Zambrano, and I'm the Global Chief Market Strategist of ATFX, and also the person managing the site investingcube.com. We're going to provide you guys with an update on the market. Today is the ECB rate meeting, and that's obviously interesting and should drive some decent volatility in the euro. So yesterday I wrote an article which I published at 3 p.m. London time, and the title is "Euro Dollar Could Slump to 108 if ECB hawks give up." Now, the general idea here with the ECB rate meeting is that they will probably cut interest rates by 20 basis points from negative 60 to from negative 40 to negative 60. So that is what they're looking at, and then potentially do a QE program where they would add maybe 35 billion euros up to about 60 billion euros per month to support the bond markets and keeping interest rates low. If they keep interest rates low, and interest rates have actually already been moving down lower, then the idea is that people with debt, so people with a house mortgage, people that want to invest in new machinery, and anybody that wants to take on debt to fund some sort of investment, but also to fund any sort of spending, would see lower bills and fees for using that. So that's the main purpose, and the idea is that then this will boost the economy higher. Now, when central bank cuts interest rates, it tends to lead to a lower currency. So rather, it's relatively straightforward here. If they cut with, say, 20 basis points, which is pretty much priced in, you might not have a huge reaction, but it's still worse off for the euro. And then the question is how much QE they're going to do. So if they add a lot of QE, say closer to the 60 billion, then that could definitely cause the euro to move down lower. And in general, the euro versus the USD is in a downtrend. So the market, as you can see here, is trading lower and lower and lower. And the next support level is 109.25, which is also the September 2019 low, the yearly low. So I think we're gonna go down lower anyway, because right now, for example, if I load my chart, you can see that the German government bond yields, if I show you that one, right now the government bond yield in Germany is a negative 58 basis points. That means if you actually lend money to the German government today, you will lose actually half a percent, a bit more than that, per year over the next years. So you give them 100, you're gonna get less back than 100. The only reason why people are actually buying this now is because the bond yields, or the actual bond, is going up. So when the yield goes up, the bond goes up. So if I do something like this, this should be the actual government bond yields in Germany. And you can see that at least from the beginning of the year, according to this chart, I'm not sure exactly how correct this is because this is a CFD. Well, the yield, or the actual bond itself, is up with about 5.5%. So obviously, you don't care about that loss of 0.5% as long as the actual asset price goes up higher, right? So I think that that is something that why people are speculating here. The problem is at one point, they push this up higher and higher, and then when this does not increase anymore, people get sort of hit the panic button, and literally everybody would sell off their bonds at that time because the actual yield itself is not good enough to hold this position. A nice comparison is that in some places in the world, for example, in China, the yield on rentals is about 1%. So effectively, you buy a flat right now. In some places, you need to wait 100 years to make your money back. Now, why would anyone buy something like that? Well, because the house or the flat itself, the apartment, is going up. That's why people are buying, so they don't care about the rental yield income. However, at one point, they need to pay the mortgages, right, for that. And what they need to do is they need to sell off maybe some of their assets because the rental yield itself might not necessarily be sufficient to cover for the actual fees. And that is when the market gets more shaky. On the other hand, if you look at in the US and the government bond yield over there, the actual yield is actually at 1.72%. So if you lend money to the US government today and buy a 10-year government bond yield, then you'll get a 1.72% return per year for the next 10 years. So this is good, right? Because you have no losses here. I mean, you can have a loss depending on what the dollar is going to do in the next 10 years, but at least you get that money, and your money is relatively safe. And if you really wanted to, you could, I guess, hedge it somehow in the FX markets eventually. In fact, the dollar is gaining overall, so you get the interest rates plus depreciation of the dollar. So I think that could explain a bit why the euro is going down and not up. Now, in regards to the pricing itself on the currency pair, so we reached this median line, which was at 105.63. The market turned lower from this median line, and this is just an Anders pitchfork that's done a really good job explaining what has happened pretty much since October last year. It's done a very good job in explaining the situation. And I think here that from the median line, people will probably try to short sell to push it down to the September 2019 low. The lower median line here is at 109.15. The alternative is that the ECB does not cut interest rates by 20 basis points. They do offer some quantitative easing, but it's very low, or they delay the whole quantitative easing until October 31st. That is when the next ECB leader is going to join, take over, because Mario Draghi would retire at that point from the role as the head of the ECB. And any of that could probably send the price upwards. And I think at that point, you could probably be, the second point to potentially turn bearish would be around 112, which stops above this level. Now, my preference is not to trade off the back of the median line. So I'm not chasing this move, but if you're trading short term, you want to know what the short term levels are, then the median line is interesting. And I think people will sell from that median line, which is 110.60 or so, all the way up to the August 26 high at 111.67. So I think people will sell here and sell it lower. Because if you get rid of all these fancy median lines, you can clearly see that this is the last short-term high. Obviously you have this one, but this is also a short-term high, and people might sell here. If it was just for me and myself with my own trading, I would probably rather wait for a bounce to short up here. That's what I would do. Alternatively, in worst case, maybe up here at 113, 36 or something like that. So that's my outlook. As for profit targets, I think the September 2019 low makes sense. You could potentially work with a level like 108, 107, 70. I think in the longer run, most likely will head lower rather than higher. As well, realistically, people getting sort of happy and seeing positive vibes. The S&P 500, as you can see here, is very close to its all-time high. And the reason for that is, of course, because you're seeing concessions both from the US and Chinese governments. Overnight, President Trump tweeted that tariffs, which were supposed to start in October, will be delayed by 2 weeks. And that means that tariffs on, it's like a silly amount of money, I think it's 250 billion goods, the tariffs would go from 25 to 30%, but that would be delayed by 2 weeks. At the same time, yesterday the Chinese government said that they would exempt about, I think it was 16 different products from Chinese tariffs. So both sides now are trying to sort of be making concessions to hopefully reach some sort of deal. And then that is lifting sort of the S&P 500. And that as well, if you think about it, if we're heading towards a better situation and the world economy would indeed bounce, so who's going to be less keen on shorting interest rates? I mean, what's going to happen? Well, the US is not going to cut as much. The ECB is not going to cut as much. And suddenly you have a situation where you have, again, very high interest rates in the US, and you still have negative interest rates in Europe. As for the S&P, as we're talking about it, we're pretty much at this high here. And it's quite interesting. You might remember when President Trump tweeted here about the introductions of new tariffs. I think that was at September. I think they said they're going to introduce things in September. I think that was the thing, and they have been now introduced. You saw the slide to the market. Now here, of course, if you were brave, it was like a typical example where sort of you buy here when things are really depressed, and then here when we're at the highs, you would really book profits because you just got that good news. Things are improving. So it's only if things are going to improve much further that this is going to go much up higher as well. However, you're having bad data from the US, right? So I don't really think it's going to go much higher. And technically as well, you have your resistance level here. So if anything, I will look to book profits up here. And if we have a pullback to 29.61, maybe 29.20, I think that is a more interesting situation. While we're talking stocks, let's talk about the German DAX. So you have the data inverse head and shoulders. You got yourself your left and right hand shoulder, and then you have the head. And here the risks and the stakes are higher. If the ECB underdelivers, which I personally think they will do, I think they're going to underdeliver, then that's going to sort of pull the rug out of the DAX traders and the DAX. We are at the levels where it's time to book profits. I would book all of that, unless you happen to be very bullish. You can keep some of it, maybe a quarter. And I think here, realistically, we'll go down a bit, maybe to 12,076. I think fib-wise, that would be a correction, slightly less actually than the first fib. But down here, I would look to get involved, possibly, and then sort of target the highs again. What we added in talking about risk markets, this is the dollar versus the Japanese yen. And the market moved up higher, as we talked about yesterday. However, though, unless you went long here, which was the same level where I had my trend defining level, you might remember I was bearish below this level. So unless you flipped to bullish the same day, you would have missed out here. Now we're reaching these levels, we're actually getting rejected at that high here. And we just need to add things up. S&P at a very high level, potentially profit taking. And then you have the dollar yen as well, starting to become interesting at these levels for bearish price action. For now, though, the way this looks like, I still think we maybe have 1 or 2 days of bearish price action and then maybe 2 days of bullish price action. But we're starting to reach this zone up here where I think it makes sense to start to turn bearish. This is actually your 78.6 fib level up here at the 108.29. So around that level, I suspect the market to start to roll over. GBP versus the USD. So the market here does not look very interested to trade much higher right now. And I think realistically, we could have a bit of a decline. So if we put our fibs on this, you can see that maybe around, say, the 50 level, maybe a little bit lower. I think we can have then potentially the next bull leg, and we'll do something like that. And then we'll see what happens. Now, I've spoken with 3 people that on their views on Brexit, and people that I think, I still need to speak with the 4th one actually, that sort of a bit representative for people that are eligible to vote, and then sort of asking them what their peers are saying. And if anything, it feels like the people that are for Brexit are more determined now than before. They're a bit upset about the whole situation, and they say that if there would be a general election, which one says is probably going to happen, and I also am of that view, it could be that the opposition, so that would be not the opposition would lose, and maybe Tories plus the Brexit Party and the DUP might get a bigger share of the seats and could potentially push through its non-deal Brexit. So if that is the case, I think this is still going to be under pressure, and maybe up here one could rebuild a bearish position around 124, 125 or something like that. I know some people rebuilding bearish positions up here already, but I think we're a little bit too early for that. I think the mood has shifted a little bit as the most extreme form of Brexit, the no-deal Brexit, has been averted for now. Okay, gold. Let's talk about gold. Gold actually bounced nicely from these levels. That will be the first fib of the rally from this low, which is 1383 all the way up to 1559, and it's bouncing quite nicely here. Wouldn't be buying here though personally. I think obviously maybe people looking at the dollar yen is at very high levels. They're looking at S&P at high levels, and they're saying, well, if they go around lower, what's going to happen here? We're probably going to go upwards. What's also happening? Well, Fed is cutting interest rates. The ECB might do something today as well, and that all sort of lowers interest rates globally, and that should also lift something like gold. Because you need to remember, why are they cutting interest rates? It's not because we're having a good times, right? They're cutting interest rates because things are not really working out as good, and that maybe is what people are buying. Now, technically though, if you're a short-term trader, yeah, okay, maybe this is a level to buy from, but I personally don't think it is a good level to buy from. Maybe I'm wrong. I still think we can go to 1470 and maybe 1449 before the market turns higher. As for West Texas crude oil, unfortunately, it looks like definitely like a false move here. So you have a triangle here. So you have this triangle here, these trend lines here, and we took out that level already on September 9th, and I turned bullish on that move. But we had some comments yesterday. I think what's happening here is that the US is potentially opening up against easing sanctions against Iran. And I think there was also talks about a meeting, I think, that caused this to slow down. And I'll be reading some reports, for example, from the team, the ATFX team out of Hong Kong, and they're actually talking about the possibility of, having a war. And I also here in Europe, actually, already like last year, I was speaking with some clients and friends, and they were saying as well that there could be some sort of a war. I never believed in the whole war scenario, but it shows you a little bit how the tensions were at least high. So easing tensions is causing this to slide down. Okay, so technically here there is nothing unchanged here. Technically, the trend is still bullish about 54.86, but the way this market is behaving right now, I have a strong feeling it will trigger below this level and go lower, and then we'll see what happens. Unfortunately, we're still dealing with US oil, which unfortunately is in a big range. We're dealing with the S&P 500, which, whatever you like it or not, it's not really trending very strongly since February 2018. And then you have Euro, which is, with the help of Janus Pitchfork, you can definitely see how you could have traded this, but it's not going down, and it's in with great speed. Let's see where the ATR is at. So this is the weekly volatility in this pair, 14-week average. So it's at 134 pips per week, and that's the same level as August 2014 and same level as January 1986. So volatility remains extremely low, and unfortunately I think it has to do with it's a lot of manipulation from policymakers. Like Donald Trump is trying to boost the stock markets, and with all these phone calls supposed to be happening. We even see it here in the UK with Boris Johnson, the Prime Minister of the UK, saying that things are going really, really well, but then people from his own cabinet, they don't understand how things can go well because they're not even talking with the EU. And then you have Mario Draghi as well, and all the central bankers always trying to sort of limit market volatility. So it's much more interference now than usual, and that means for us that trading with a breakout strategy, I know that for a fact that it hasn't been very, very good over the last 12 months. Rather, selling rallies like these ones have been a better option, and even fading has actually been an option, like here when the market was on 109.24. As for the dollar index in general, it's also guided by some sort of a pitchfork. You can see here how the market, it's not the most perfect pitchfork, but you can see that around the blue level the market buys, and as soon as we have some breakouts, they usually tend to be faded. Okay, we got a question here. What is it like to work in finance in London? You always work for brokers, not banks. You change jobs a lot of times the last few years, not very stable environment. I used to work for a bank actually. When I was a student in Sweden, I worked for a bank in the evenings. I think about maybe 2 years, and then I worked on the investment bank arm as a dealer over a summer, and then I completed my master's in London. So that's why I moved from Sweden to London. And then I was with the same company from 2009 to 2016. And then I set up my own company. And then I worked a bit for a Middle Eastern broker called Amana Capital. And since February, I'm with ATFX. So I had 2 jobs since 2016. I think finance in general is very shaky in London right now, especially because of Brexit. I have some friends that used to work, for example, Morgan Stanley, running the Dutch desk and working with big companies and governments over there. He's now relocated back to Holland. Have some friends from Germany that are also sort of getting requests to move back. So yeah, it's not the way it used to be, but it's still very an exciting place, finance in general. And yeah, so still, I mean, it's a very, very good spot to be. As for stable, the thing I can say about stable, the job market in London is so big, So you need to think about it like this. When it comes down to the unemployment rate, in the UK in general, the unemployment rate is at 3%, right? It's not the best 3.5% that are not working, right? And it's within that in every industry. Maybe certain industries, the unemployment rate is higher, maybe 10%, 15%, but it's not the best 15% that are not working. So as long as you are good at what you're doing and have passion for what you're doing, you will have a job. Not always, of course. Sometimes you're waiting for that great opportunity. But if you really wanted to, you will be working. So yeah, it's still much better. Still probably the best place to be in Europe, but I think and if you're looking for career development, money, and an interesting job, because that's what it is with all these sort of political changes. Donald Trump, you get the opportunity to talk with people to figure out what they think, and also you try to navigate the markets. Okay, so we don't have any more questions than that one, so I think we're going to wrap things up. If you do have any questions, you're most welcome to reach out to me. We are on Twitter and Telegram. So this is the link to the Investing Cube Telegram. And this is the link to the Twitter of Investing Cube. Telegram is quite cool because you actually get all notifications. You can, of course, mute them if they become a bit annoying. So we set this up just a few weeks ago. So you get the little chart with the link and you can read them in the app. And Twitter is Twitter, as you know, looks like this. Again, something we just launched. Now, if you're watching this as well, don't forget to click on that button there and to like the video. It's really, really important if you like it that you click on it, because that sends some signals what we should be focusing on. To give you an idea, if I start to notice that more people read the articles than watching the videos, then obviously it makes more sense to do articles instead of videos, right? So if you do like the videos, it's important that you like them, because it does affect my behavior, where I want to be focusing on where I can reach the most amount of people. So if you like it, share it and click on the thumbs up button. Okay, guys, I'll be back tomorrow, same time here at investingcube.com. Have a great day, and I'll see you guys tomorrow, and happy trading. Bye.